Here are the English translations of the briefings dated April 3, 2026, organized by topic. ############################################################################################################################################################################################################################################################################################################################################################################################### Discussions regarding Cathie Wood's ARK Invest AI roadmap have recently intensified, focusing on three core developments: the inclusion of OpenAI in its ETF portfolio, structural adjustments amid market pullbacks, and signals of trimming positions in certain big tech/AI stocks. 1. OpenAI joins ARK ETFs, driving interest in early-stage access ***. According to Investopedia, OpenAI will join the ARK ETF lineup, viewed by the market as a new and more accessible gateway to private capital markets. Analysts emphasize that the ETF structure allows investors exposure to the OpenAI ecosystem and potential early-stage opportunities with lower barriers to entry, noting that the focus is on access rather than a direct guarantee of short-term stock performance. 2. Rebalancing amid market pullback, trimming AI, crypto, and internet holdings ***. A Seeking Alpha report indicates that following a broad market sell-off, ARK trimmed positions across AI, crypto, and internet assets. This adjustment suggests that amid fluctuating valuations and risk appetite, ARK's style may be shifting from betting on the continuous expansion of a single growth track toward prioritizing portfolio-level risk management and reallocation in high-volatility environments. 3. Cooling signals for AI big tech, potential trimming of NVIDIA, AMD, Meta, and Google ***. Yahoo Finance reports that Cathie Wood appears to be cooling off on several traditional large-cap tech and AI heavyweights, specifically naming AI darlings such as NVIDIA, AMD, Meta, and Google. This aligns with the aforementioned rebalancing. Even as the overarching theme remains AI innovation, capital allocation may not maintain equal intensity across all segments of the value chain. 4. Long-term vision intact, continuity in AI and robotics management ***. An article from Indexbox examines the ARK Innovation ETF, ARKK, through the lens of managerial vision, emphasizing a continued long-term focus on AI and robotics. The report stresses that while the strategic framework remains unchanged, specific position sizing will adjust dynamically according to market conditions. Key takeaways for investors ***. 1. The inclusion of OpenAI in ETFs represents a shift in accessibility at the trading and allocation level, marking the continued expansion of the ARK ecosystem. 2. ARK selling and rebalancing during volatility serve as a reminder that thematic investing is not synonymous with unconditional buying. Position discipline remains a critical variable for short-term performance. 3. Potential sell signals for NVIDIA, AMD, Meta, and Google suggest investors should reassess the weighting and sustainability of the AI theme across different segments based on their own risk tolerance. Conclusion ***. Overall, Cathie Wood's AI narrative remains intact, but the tempo and logic of her positioning now show clearer signs of thematic continuity combined with market rebalancing. ARK is simultaneously strengthening its ETF coverage through names like OpenAI while adjusting its exposure to AI and big tech chains in a corrective market environment. #briefing, Demis Hassabis, the key figure behind DeepMind. As of April 3, 2026, media coverage of Demis Hassabis focuses on his career trajectory, his stance on AI safety, and his pivotal interactions with tech giants. The consensus portrays him as a central figure driving advanced AI R&D who remains vigilant about potential risks, advancing his work within the tension of concern versus construction. 1. The core leader and driver of DeepMind ***. Reports position Hassabis as the definitive figure of Google DeepMind, its spiritual and technical representative. He is described not just as a corporate executive, but as a leader whose identity is inextricably linked to research roadmaps, capability building, and organizational strategy, the man tasked with actually building frontier AI while emphasizing the need to understand and manage its global impact. 2. Intense focus on AI safety, the motivation to build it safely ***. The Atlantic highlights his vision of trying to keep AI safe, noting that while Hassabis believes in the long-term value of capable AI, he remains cautious about the reality of its risks. This narrative suggests that for Hassabis, AI safety is not an afterthought but a framework that must permeate R&D and deployment. 3. Scared of AI, but still building, the logic behind the paradox ***. An article in The Economist states bluntly that Hassabis is scared of AI yet still building it. This conveys a core philosophy: fear does not necessitate a halt, rather, it should drive stricter safety governance, faster risk assessment, and more robust technical pathways. His stance is one of simultaneous capability enhancement and safety constraint. 4. The battle for DeepMind, pre-Google acquisition maneuvers ***. Media reports have revisited the competitive landscape surrounding DeepMind before its acquisition by Google. The Times of India mentions that Mark Zuckerberg expressed interest in buying DeepMind, using Hassabis' insights on what went wrong to illustrate that the Google deal was the result of complex negotiations, judgments, and strategic pivots. 5. The dinner test rumors, trust and alignment beyond the deal ***. MSN further describes a dinner test as a turning point between Zuckerberg and DeepMind. This detail suggests that for high-risk, high-uncertainty frontier tech assets, the final decision often hinges not just on valuation, but on leadership style, vision alignment, and mutual agreement on risk control. Conclusion: most valuable insights. Strong safety governance ** Hassabis is consistently portrayed as a figure attempting to maintain a safety baseline while pushing AI capabilities forward. Risk vigilance parallel to R&D **. Despite admitting to being scared of AI, he continues to build, emphasizing that risks must be addressed in real time during development. Strategic path influenced by competition **. His interactions with tech titans before and after the Google deal, including the dinner test, are key to understanding DeepMind's capital and strategic positioning. #briefing April 3, 2026, NVIDIA AI. 1. Ecosystem expansion, Marvel joins NVIDIA collaboration. NVIDIA announced in a press release that Marvel has joined its AI ecosystem framework to advance multi-chip interconnects and collaborative computing through *** NVLink Fusion ***. This move signals NVIDIA's expansion of its data center and infrastructure network, strengthening its integrated solutions from hardware interconnects to system-level performance. 2. The return of multi-GPU, AI SLI for DLSS5. NVIDIA is reportedly introducing the *** AI SLI *** concept for multi-GPU configurations. The goal is to leverage smarter multicard synergy to drive and enhance future product experiences, specifically focusing on DLSS5. This indicates that NVIDIA is moving beyond rendering and upscaling to make multicard collaboration a key lever for edge and platform-level performance. 3. Sustained compute demand, Mistral funding tied to NVIDIA capacity. The Wall Street Journal reports that Mistral AI raised $830 million in debt financing to support investments powered by NVIDIA data center capabilities. This link between funding and demand reflects the market's continued investment in AI compute expansion, reinforcing NVIDIA's role as the core infrastructure provider. 4. Capital and industry maneuvers, NVIDIA's stake in Marvel. Barron's noted a surge in Marvel's stock price, partly attributed to NVIDIA taking stakes/investing in its AI chip rivals. This aligns with the NVLink Fusion partnership. NVIDIA is strengthening its influence not just through technology, but through capital, using industrial synergy to hedge against competitive uncertainty. 5. Market sentiment pressure, valuation hits 7-year low amid war plus AI anxiety. Reuters reports that NVIDIA's PE ratio has dropped to a 7-year low, driven by war-related uncertainties and anxiety over AI demand and supply chain fluctuations. This valuation pressure suggests that while ecosystem partnerships and compute demand remain strong, the market remains cautious regarding risk and growth visibility. Overall assessment ** NVIDIA's current strategy is a combination of technical synergy, NVLink Fusion, plus multicard solutions, AISLI/DLSS5, plus industrial/capital integration, Marvel investment, plus compute demand realization, Mistral funding. However, macro and industry sentiment continue to weigh on valuations, and short-term stock performance will likely fluctuate around uncertainty and the actualization of AI growth. #briefing April 3, 2026, Facebook, Meta, AI trends. Recent reports on Meta's AI layout and organizational restructuring reveal several consistent themes. Meta is accelerating AI capability building while simultaneously focusing on content governance, industrial applications, and resource reallocation. However, deeper discussions point to a significant risk that AI development may repeat the same problems seen during Facebook's early years. 1. Learning from Facebook's wrong turns, potential AI risks ***. An article in Fortune provides a warning from the perspective of a Facebook veteran. AI is heading toward a dilemma similar to Facebook's past struggles. The core message is not to reject AI, but to emphasize that while pursuing growth and scale, Meta must prioritize governance, incentive mechanisms, and safety boundaries to avoid a chain reaction of issues as technical capabilities expand. 2. Meta forms elite AI unit to bolster talent and R&D ***. Business Insider reports that Meta has launched a new elite AI unit, disclosing key hires. This reflects an organizational upgrade aimed at centralizing high-level talent to accelerate the development and deployment of critical models and systems. 3. Content moderation for the AI era becomes a priority ***. TechCrunch highlights how Facebook insiders are building content moderation capabilities specifically for the AI era. This aligns with the risk discussions mentioned above. As AI capabilities grow, Meta is treating the governance side, especially moderation, as a vital hedge and constraint. 4. AI enters industrial scenarios, cement and concrete applications ***. A Meta blog post introduces AI applications for American-produced cement and concrete. This indicates that Meta's AI is not limited to social platforms but is extending into external industries, exploring practical value in engineering and manufacturing. 5. Resource reallocation, layoffs linked to AI pivot ***. Newstalk 870 reports that Meta, Facebook/Instagram, has laid off another 168 workers in Washington state to further AI-related directions. This reflects the cost-efficiency logic of AI within the company. Certain roles are being automated or restructured, triggering external concerns about the impact of this transition. Summary * Meta's AI strategy is moving on 3 fronts. 1. Organizational * establishing elite units to speed up R&D. 2. Governance * strengthening AI-era content moderation. And 3. Application * exploring industrial use cases. The most notable warning from critics is the potential for AI to duplicate Facebook-style problems, emphasizing the need for continuous investment in safety and governance. #Google AI Briefing, April 3, 2026. 1. Google releases March AI updates ***. Google's official blog reviewed its latest AI progress and announcements from March 2026, demonstrating a steady rhythm of model and product deployment, covering both user-facing feature updates and technical disclosures. 2. Commercial compliance and risk. Target warns on shopping with Google AI ***. Business Insider reports that Target has issued risk warnings regarding customers using Google's AI capabilities during the shopping process. This reflects a growing need for platforms to focus on information accuracy, the reliability of generated content, and compliance risks as generative AI enters the e-commerce and consumer decision-making chain. 3. Enhanced user control, how to disable AI features in Google accounts ***. CNET provided a guide on how to turn off AI-related features within Google accounts. This information empowers average users with opt-out privacy and preference controls, suggesting that AI by default experiences are now being paired with clearer management paths. 4. Safety governance and research, responsible disclosure of quantum vulnerabilities ***. Google's research team published a paper emphasizing a responsible approach to disclosing quantum-related vulnerabilities to mitigate potential risks to cryptocurrency and security systems. This shows Google is managing the disclosure patch mitigation process as part of its frontier safety research. 5. Paid subscription upgrade, AI Pro monthly plan gets storage boost ***. Engadget reports that Google's $20 per month AI Pro plan now includes a significant storage increase. This change targets power users, offering higher usage limits and better support for long-term content and workflows to improve productivity. Conclusion ***. This period's news highlights 3 main themes: Google's continuous product and tech updates, the emergence of compliance and risk management issues in real-world commercial scenarios, and the parallel advancement of user privacy controls and responsible safety governance. #Briefing April 3, 2026, Meta AI, hardware and internal training. Meta is currently advancing along several strategic tracks: AI smart hardware, enterprise AI capability building, and addressing public controversies. 1. AI prescription glasses, smart hardware for vision correction ***. Meta has released its first AI glasses designed for prescriptions, emphasizing the integration of AI with daily eyewear needs. This marks a shift from tech demos to practical productization. External media also highlighted the glasses' utility, such as helping a blind runner complete a half marathon by providing directional guidance. 2. Accelerated internal training, empowering employees with AI agents and coding ***. Meta is conducting intensive AI training weeks to encourage employees to test AI agents and practice coding, reportedly involving tools like Claude. This suggests Meta is shortening the cycle from model capability to engineering deployment to prepare for future product and ecosystem expansion. 3. Compliance and trust challenges, privacy controversy hits the courts ***. Despite Meta's promises that its AI smart glasses would not spy on users, a lawsuit has been filed alleging the opposite, that human intervention or viewing actually occurs. This controversy could be a major variable in the large-scale rollout of Meta's hardware, particularly regarding privacy, data processing, and user notification. 4. Capital market performance, weakness following resilience ***. In the capital markets, reports suggest that after a period of resilience, Meta's stock may face a pullback due to factors cited as a bad year. This indicates that short-term market sentiment remains cautious regarding the company's current performance and future outlook. Summary * Meta AI is focusing on wearable AI productization and internal development capabilities, but must urgently provide stronger safeguards for privacy and user trust. Market fluctuations serve as a reminder that technical progress must be converted into verifiable business returns. #briefing April 3, 2026, Meta AR/VR trends. Meta has made several announcements regarding AR/VR and smart glasses, focusing on prescription eyewear while simultaneously scaling back certain AR/VR organizational units and VR metaverse products. 1. Upcoming release of prescription-oriented smart glasses ***. Multiple outlets report that Meta may launch prescription-optimized smart glasses this week. This is seen as an expansion of Meta's existing eyewear line, with the core highlight being better accessibility for users who require vision correction. 2. Ray-Ban smart glasses to incorporate prescription lenses ***. Farot.com and others report that Meta has announced a new prescription-optimized Ray-Ban eyewear solution. This signals that Meta is making direct prescription compatibility a key competitive advantage to lower the barrier to entry for daily use. 3. Contraction in AR/VR business, 168 jobs cut in Washington, ***. MSN reports that Meta is laying off 168 AR/VR related positions in Washington state. This reflects a rebalancing of resource investment and organizational structure within the AR/VR division. 4. Potential termination of key VR metaverse products ***. Another MSN report suggests Meta may discontinue a key metaverse product, targeted at VR headsets. This indicates a consolidation of Meta's VR content/platform strategy to focus resources on higher growth areas like smart glasses. Summary * Meta's latest moves show a dual-track approach. On the product side, it is expanding its reach through prescription-optimized Ray-Ban glasses. On the strategic side, it is optimizing resources by cutting certain VR metaverse projects and staff. #briefing April 3, 2026, Mark Zuckerberg. Recent news regarding Meta CEO Mark Zuckerberg spans business, technology, and social issues. 1. Market volatility and billionaire wealth ***. Fortune reports that a market downturn has significantly erased the wealth of several billionaires, including Jeff Bezos and Mark Zuckerberg. Zuckerberg's net worth reportedly dropped by approximately $75 billion, illustrating that even the world's largest fortunes are not immune to market shocks. 2. Interactions with Elon Musk, IP and Doge ***. Engadget reports that in 2025, Zuckerberg expressed a willingness to help with Elon Musk's Doge-related initiatives. Furthermore, Business Insider revealed unsealed court documents showing that Musk once made an unsolicited bid for OpenAI's intellectual property to Zuckerberg, highlighting their complex interactions over sensitive IP and potential deals. 3. Social impact, school closure crisis ***. The San Francisco Chronicle reports that a school supported by Zuckerberg's foundation is set to close, creating a crisis for the San Francisco Bay Area School District. This highlights the sustainability challenges faced by his philanthropic educational initiatives. 4. The forward response to Musk ***. The Times of India noted Zuckerberg's low-profile approach to industry drama. When Elon Musk reportedly texted Zuckerberg inviting him to join the controversy surrounding Sam Altman, Zuckerberg replied with just 4 words, reflecting his reserved stance in external power struggles. Summary ***. Zuckerberg is currently navigating wealth pressures from market volatility, complex interactions with other tech titans over frontier projects, and sustainability tests for his philanthropic social projects. #briefing XAI Trends, April 3, 2026. 1. Organizational changes, last co-founder departs ***. Reports indicate that the last remaining co-founder of Elon Musk's XAI has left the company. This departure may impact market expectations regarding XAI's team stability and future R&D pace. 2. Legal risks, explicit image controversy ***. A teenager in Tennessee is suing XAI, alleging that its image generator produced sexually explicit images of them as a minor. This puts generative content safety and moderation at the forefront, involving platform audits, model risk control, and potential regulatory costs. 3. Product and pricing, Super Grok Lite for affordability ***. XAI has launched Super Grok Lite, a more affordable plan designed to make Grok accessible to a wider audience. This commercial strategy aims to attract individual and small-scale users through tiered pricing. 4. Industry spillover, AI and space risks ***. The trend of billionaires taking AI into space has been flagged for potential safety hazards. This suggests that XAI and similar firms must prioritize reliability and controllability when deploying AI in high-risk, high-constraint environments like space. Summary ***. XAI's current variables are centered on organizational stability, legal/compliance risks regarding generated content, and commercial expansion through tiered pricing. #briefing April 3, 2026, Elon Musk's AI empire. 1. Industry-wide opposition ***. Media reports suggest that AI leaders are forming a consensus to hedge against Elon Musk's direction, citing concerns over regulatory compliance, technical roadmaps, and his outsized industry influence. 2. Structural shifts at XAI ***. The Next Web reports that all 11 original co-founders of XAI have now left the company. This suggests significant volatility in Musk's AI organizational structure, potentially affecting project continuity. 3. Orbital data centers and compute infrastructure ***. Futurism highlights Musk's massive investment in orbital data centers, a long-term infrastructure play. Despite external controversies, Musk continues to double down on compute and network infrastructure to support his AI ambitions. 4. SpaceX IPO preparations ***. Bloomberg reports that SpaceX has privately filed for an IPO, a move seen as preparation for the accelerating AI race. This indicates Musk is coordinating capital across his various ventures, AI, aerospace, to enhance expansion capabilities. Summary ***. Elon Musk's AI ventures are characterized by rising external pressure and internal restructuring, balanced by aggressive long-term investments in compute infrastructure and capital maneuvers. #briefing, Sam Altman, April 3, 2026. 1. Personal legal updates, amended lawsuit ***. Reuters reports that Sam Altman's sister has amended a lawsuit involving allegations of sexual abuse against the OpenAI CEO. While the case is ongoing, the amendment suggests a shift in legal strategy or specific details of the allegations. 2. Public discourse, direct talk on Sora and military risks ***. In a groundbreaking interview with Page 6, Altman discussed the perils of Sora, generative video, the use of AI by the Pentagon, and the pressures of parenthood in the context of his technical influence. 3. Industry impact, a decade-long battle for the future of AI ***. The The Wall Street Journal frames the current AI landscape as a decade-long dispute over the future of the technology, with Altman at the center of deep-seated contradictions between policy, capital, and technical roadmaps. 4. Influence expansion, the TBPN acquisition ***. The San Francisco Standard reports that Altman has added TBPN to OpenAI's influence network, a move seen as an upgrade to OpenAI's influence machine to further its organizational reach. #briefing April 3, 2026, OpenAI highlights. 1. Record-breaking funding ***. OpenAI announced a massive $122 billion funding round to accelerate the next phase of AI development. 2. M&A activity ***. OpenAI completed the acquisition of TBPN to bolster its technical team and resource integration. 3. Musk-Zuckerberg joint bid reveal ***. Court records show that following their cage match challenge, Musk and Zuckerberg discussed Dodge and a potential joint bid for OpenAI. 4. Product pivot ***. OpenAI is ending its current AI video features to reallocate resources towards Sora and more sustainable generative paths. 5. Ecosystem engagement ***. OpenAI maintained a strong presence at the ASU plus GSV 2026 summit to link with the education and startup sectors.